Accounting records in case of numerous transactions. That is, if we have many transactions of goods sold on approval, we may keep a memorandum set of books as below. We have a sale or return day book and a sold and returned day book. Basically, we had one day book in the case of goods sent on approval on frequent basis. Now we have two day books, one when goods are sent on approval and one when goods are approved or when goods are returned. So there is a sale or return day book and there is a sold and returned day book. What is recorded in these day books is posted into the sale or return ledger. Sale or return ledger, which again has two kinds of accounts. One is a total sale or return account, just as we discussed previously, and the other is individual customers accounts. So as we mentioned before, if we have 200 customers who are being sold goods on approval basis, we would have 200 customers account in the sale or return ledger. The entire construction is very similar to what we did in case of frequent transaction. The only difference being that instead of one goods on approval day book, we have two books, a sale or return day book and a sold and returned day book. Entries here are posted into the ledger, which has basically two kinds of accounts, the total sale or return account and individual customer accounts. I repeat again, these are again memorandum books, not a part of the main books, not a part of principal books, not a part of subsidiary books. They are memorandum books. The sale or return day book, this would be the format where we have a date, we have the details, the name of the customer, etc. A folio or the page number of the ledger account into which we would be posting transactions and the amount called. Similarly, so the total that we get in the sale or return day book, the total of this sale or return day book is taken to the credit of the total sale or return account. So basically, with this total, we credit total sale or return account. And with the individual customers, we debit customers account. This is done individually, this is done in total. The format of the sold and return day book is similar, except that we have two columns. One is for goods returned and one is for goods sold. We have the date, we have the particulars, we have two ledger folios. One is sale or return and one is sales. Here, the total of the goods returned and the total of the goods sold both are debited to the total sale or return account. Total sale or return account. Individual customers accounts. Individual customers accounts are credited. Credit customer account. The posting, as we discussed, this is the ledger account, again maintained in the sale or return ledger. Individual debtors accounts are debited whenever goods are sent on approval. It is credited whenever goods are returned or whenever goods are sold. Goods returned or goods sold. Goods returned, goods sold. And it is debited whenever goods are sent on approval. Therefore, the balance in this account would be a debit balance indicating the balance lying with the particular customer at the selling price. The total sales or return account is credited whenever goods are sent on approval. And it is debited with the goods returned and the goods sold. The balance in the total sale or return account would be a credit balance indicating the balance, total of the balance lying with the different customers but at the selling price. We repeat, the sale or return journal as well as the sale or return ledger are both memorandum books. Let us consider an example to better understand what we just discussed. A Limited on 20th March sent goods costing 1 lakh at a profit of 50% on cost to one of its customers XYZ Limited. These goods needed to be approved or returned by 20th April. On 25th March, 60% of these goods were approved. On 27th March, 10% of the goods were returned. Book closing is on 31st March. It's the same example. So quickly, sale or return day book, XYZ goods sent on approval on 20th March have been recorded as 1,50,000. This is the day book. Whenever goods are sent on approval, we first record it in this day book. It may be called the day book, it may be called the sale or return journal. Similarly, we have a sold and returned day book. On 25th March, when goods were sold, goods were approved, they were recorded here in this column. When goods were returned, they were recorded again in the same book in a different column. So we have the total of the goods sent on approval in the sale or return day book. We have the total of the goods returned in the sold and returned day book, which also has the total of the goods sold. In the sale or return ledger, XYZ Limited's account would be debited to total sale or return with the amount of goods sent on approval, which is nothing but 1,50,000. So here it would be by XYZ Limited. Actually, this is by sundries. It is not by XYZ Limited because posting is done in total and not individually. So we may say by sundries, goods sent on approval, 1,50,000. For the goods which are returned and for the goods which are approved, XYZ's account would be credited. This is returned and this is sold. 90,000 sold and 15,000 returned. Total sale or return account would be debited to sundries, returned 15,000, sold 90,000. Again, balance carried down would be 45,000, indicating the total value of goods lying with the customers. The balance in XYZ, in this case, since we have taken the example of just one debtor, it is the same balance, but this is a debit balance of 45,000, indicating that there is stock lying with XYZ at the selling price of 45,000. This stock needs to be brought into the books as stock with customer to trading account, but at the cost price, since cost price is lower.